Hello and welcome back to our channel. My name is Willy and today we're going to look at Relative Strength Index or RSI and how to use it in your trading. So get yourself comfortable at home, grab your pen and paper ready, let's dive in with Willy. Now, some of you might have heard of RSI or Relative Strength Index when you actually read some analysis report or from an analyst that actually uses this indicator in their analysis itself. However, although it might look quite simple from how it looks like, some of us might not know how to utilize it into our trading itself. So today we're going to dive in a little deeper, slightly. We're going to look at the basics, and then after that, we're going to recap slightly on what this indicator is, and then we're going to look at some implications that we can see from RSI. So let's dive in. Now let's take a little recap on what actually is an RSI indicator or Relative Strength Index. RSI indicator actually is used to measure the momentum of an asset in terms of its price. Momentum as in how much the price moves from period to period itself. So from there itself, it actually measures the speed and magnitude of the price change, like how fast does the price change throughout this period and how big is the magnitude of the changes. Is it quite big or is it quite small? So from there, they can actually calculate out whether the price of the asset is actually overvalued or is it undervalued. Now, in terms of investment, we always hear this term of overvalue or undervalue. Some basic understanding of these two terms is that when the price of an asset is overvalued, this means that its true value itself is way below than its current price. Whereas if it is undervalued, it means that its true value is way above than its current price. So these two elements is going to be quite important throughout using RSI because it actually incorporates overvalue and undervalue into the indicator itself. So later we will see how we actually determine these values, and we will look at what are the trends that are expected when these two values are being touched or it is being shown in the indicator itself. Now, in terms of RSI, we have two important components to it. Number one is the overbought and oversold that I've just explained earlier. And number two is RSI line, which is known as the indicator line or the main signal line for this indicator itself. So the RSI line is actually set at default to 14 periods, which means that it will calculate the price momentum for 14 periods before the current price occurs. So right now we will actually look at how it looks in terms of the platform that you might use. We are going to use TradingView for this demo itself. However, it might look slightly different in MetaTrader 4, but both still function the same way as it is. Now, right here, we are actually looking at a pound sterling to Japanese yen graph, and this is our RSI indicator itself. So let's just make it slightly bigger so that we can see each component that it has. So first of all, the first component that I'm going to explain is this line that you see in the middle, which is coded or color coded in green. So this line is actually called the RSI line, where it actually calculates the magnitude and also the changes in previous prices or price actions and measure the magnitude itself and the momentum, and then it will draw this line here. So basically this line is going to oscillate in between several dimensions, and most of the time it will only oscillate in between 30 and 70. However, there are also certain periods where it actually oscillates outside of this 70 and 30 range. Now, later on, we're going to explain further details into what this range actually is about. Now, in terms of the range itself, why do we actually use 30 and 70 is because during the development of this indicator, they believe that the 30 level and also the 70 level is where the oversold and also overbought actually lies. Anything that crosses below 30 means that the price of the asset itself is actually way undervalued, and thus it is actually known as oversold. That means too many people are selling it and not much of people is actually buying it. Whereas anything that is above the level of 70 is also known as the overbought. This means that the price of the asset is actually overvalued, and this means that the asset itself is actually being bought by too many people, and the demand is way too high, but the supply is way too less. So these two levels is going to be the key in using this RSI indicator, as there are certain strategies that actually make use of this overbought and oversold. But for today, we're going to look at these basic uses of RSI, and then later on in the future videos, we're going to discuss on using RSI in terms of divergent signals. Now, to put everything into perspective, whereby you can actually see it much more clearly from the illustration rather than looking at a graph for now, because sometimes when you look at a graph and when you apply RSI into it, it might look a bit, complicated. So we're going to look at the theoretical part of it with our own illustration. So basically, RSI consists of two levels, which is the oversold level at 30 and then overbought level at 70. So let's just imagine that this gray color line here is actually the RSI line with 14 periods. Normally, RSI line would actually oscillate in between the level of 30 and 70, and then sometimes it might go overbought or maybe go oversold area, but it depends on the market volatility at the time and also its condition. So one thing I want to emphasize here is that whenever the RSI line actually crosses the level of 70, let's just say it's just recently crossed it around this area here. This actually gives us an indication that we should prepare to anticipate for something that is going to happen to the price. So in this case, because it has crossed the level of 70, so we can actually anticipate that the price of the asset might come back down eventually. We're not sure when, but we're going to wait until the signal actually confirms it. So it might actually oscillate above 70 for a while, and then maybe for the next few days it still oscillates there. But then right now you saw that there's a chance because the RSI starts to curve back down and starts to try to re-enter into the level below 70. So whenever you see it tries to re-enter back from above 70 into below 70, that is the time where you can actually place a sell order, because this is an indication that the price, in terms of its recent movement, has actually stalled in terms of its uptrend, and it may actually come back down subsequently. So in this case here, there's two takeaways. One is that whenever the RSI crosses the levels of 70 and goes above it, we can actually anticipate for a bearish movement to happen. And second takeaway is that whenever we saw that the RSI line starts to curve back down and re-enter into the level below 70, that is where we can actually determine to enter into the market and place a sell order. So this is one part of how we can actually use an RSI indicator whenever it crosses above the level of 70. Now, on the contrary, whenever we saw the RSI is actually trending downwards and it actually has breached the level below 30 from this indicator window that we can see here. So one of the takeaways that we can actually anticipate for a bullish rebound to occur, because it's actually crossed the level below 30. So we expect it to be oversold and it might come back up in the future. So first takeaway is that is to anticipate for a bullish action to be taken or to occur. So whenever the RSI actually begins to curve back up and then tries to re-enter back into the level above 30, this is where we can contemplate or to decide whether or not we want to go into the market and place a buy order, because this is one of the signals that is provided by the RSI that indicates the price action for the asset itself has actually exhausted in terms of its downtrend, and maybe it's time for it to come back up a little bit as a retracement or a rebound. So this is how we actually use RSI in terms of looking at the oversold and also overbought level, which is the 30 and 70. And that's all for today about RSI. Don't forget to subscribe us on YouTube for more content just like this.